Hello? I'll share a universal rule on how to properly set stop loss and take profit levels when trading in the cryptocurrency market. I want to emphasize that I trade specifically in the cryptocurrency market, and this so-called universal rule works here. If you're trading on Forex or the stock exchange, this rule probably won't work there, I don't know. Maybe it will. I just haven't tried it. It works here. Why do I put universal rule in quotes? Because naturally, each strategy will have its own unique combination of setting stops and takes in such a way that you are mathematically in the plus over the long run. But you can stretch this principle to fit absolutely different strategies. Later on, you might refine it specifically for your strategy, but you can start with it in general. It's a good example for any strategy you might use. Later, you may refine it to suit your specific strategy, but you can start with it in general. This is a good example for any strategy you might be using. Before I give you the specific rules and levels as an example of where to place stops and takes, I want to say that the truly universal rule for setting a stop loss is to exit a trade at a loss where the logic of your trade ends. So for example, here we have some kind of bottom, and right now the price is going down here. You open a long position because the price has reversed. There's a bottom here, some ascending lows, and maybe there's something else, like a retest. It doesn't really matter. Right now, the market doesn't really look like it's about to reverse. Everything is likely to drop down. But I found one coin that somewhat resembles a bottom pattern, something like that. Something similar after a drop, to show by example if this really is the bottom, and the price goes here, where you can set the stops and takes. So, in this case, where does the logic of entering end? So this is the bottom, for example, right? And the logic of entering ends where, first, it was either a false breakout, and you entered the breakout to profit from the further impulse. If it's a false breakout, that's it, I'm out. Or I can ride out a false breakout, well whatever, I'll wait it out, and maybe there will be a second false breakout, and on the third one, maybe it will really take off, I'll just wait for that. But if the price falls below this pattern, that's it. You have no logic left. It ended from the start. The logic, you went into a reversal pattern. Right here, you probably should have exited, but you held on and waited, but you really shouldn't be here anymore. Why are you still in this trade? There's no logic. But that's a general summarized rule. Now I'll explain specifically in terms of levels, what to set them for. Pay attention to the description. There will be a link to register on the Bybit exchange. This is the #1 exchange that I personally trade on, and it's the top one in terms of trading volume, liquidity, and it has the lowest fees. Only with this you will be monthly. Save around a few $100s. And why do I recommend registering specifically through my referral link in the description? With it, you'll get a cash bonus for registration ranging from $10,000 to $30,000, depending on the size of your deposit. Most of my subscribers get $100, but if you don't have any deposit at all, you'll at least get $10 credited. If you're a big trader, with a good deposit, you can get up to $30,000 credited, but for larger amounts, you'll need to reach a corresponding trading volume. On this page, click here, and you can see what bonus you'll get for registering. The link is below. Enjoy watching. For example, the price comes up here, and you enter a trade on the retest. This is where you open a long position. Obviously, I need to set a stop loss somewhere below so that if the price falls, I can cut my losses as much as possible. And it's best to set the take profit a bit higher so that if the price moves in my favor, I can maximize my profit. But at the same time, you shouldn't set the stop loss too close, because you need to give the price some room to breathe. So this kind of situation shouldn't knock you out of the trade. And on the other hand, you shouldn't set it too low either, so you don't end up losing a lot of money in case things go wrong. When it comes to take profit, don't set it too low. You need to find a way to maximize it. Also, don't set it too high, as you might lose money in a profitable trade. Find the optimal balance for setting the stop and take. And you shouldn't set the take profit too high, like way up there, because you might have entered a good trade, and there could be some momentum that works out. But if you don't lock in your profit, you could end up losing money in a profitable trade just because you set the take profit too high. You need to find the optimal balance for how to set the stop and how to set the take profit. First, let me talk about how to set a stop, because that's the top priority for a trader. First and foremost, they focus on limiting their losses. A trader never buys a coin. If it goes down, he averages it, and if it goes up, he sells it somewhere and he makes a nice profit. A trader doesn't do that. This is usually done by beginners or maybe some so-called investors who think they're doing it right. Actually, no, they just limit their profit by locking it in at a minimal gain. Don't limit their losses when they set stop losses and average down somewhere. A trader does exactly the opposite. If the price goes against him just a little bit, he takes a small loss and exits as quickly as possible. But he looks for that balance where, on one hand, he gives the price some room to breathe so he doesn't get knocked out, and on the other hand, he doesn't lose too much. So the optimal rule is to go through one level on the working time frame I'm currently on the 5-minute chart. Here's the level that's below me. Let me remind you that I entered the trade right here. Here's the level that's below me, the first one. The next level that's going to be below me. By the way, I made a video on my YouTube channel about how to find levels. You can subscribe, check it out, understand. Well, you can definitely set it under the low, but usually, if the low hasn't interacted or touched any levels, I mark the next one instead. I mean, just to give it some room to breathe, as they say, in case it updates the low like this, so I don't get caught. One after another, so this is the nearest level. And the next one, here it is. You can also look for some really tiny, super small levels that might work on a smaller time frame. Mark it, but that's nonsense, don't do that. Focus on key levels. 1, 2, set stop loss after. Check before trading. Enter here, stop loss here, assess affordability. If a 5% drop occurs, and I can handle a 5% drop, if I can handle a 10% loss to my balance with a second leverage, then this is my trade. If I'm trading with a fifth leverage, then a 25% loss to my balance, that's even 30%. Plus there will be commissions, right? And there's also a 5.35% loss here. Slippage might happen somewhere else too. So in that case, I would end up with no balance at all, and I just won't open the trade. If I'm trading with low leverage, then a 5% drop is okay for me. I can handle it. It's mine. This trade is mine. Great, I can handle it. That's it. With that, we've made our decision. We're setting the stop loss here. Where do we set the take profit? We set the take profit just below the nearest next resistance level on the higher time frame. What does that mean? That means if I'm trading on the 5-minute chart, I go to the 15-minute chart and look at what levels were above. It's all very simple here. Here's the level on the 15-minute chart. And here I take my profit. Here, below it, not above it. Because if the price has already broken through it, then why would I want to take profit above it? The price has broken through, so it might give an impulse even higher, and I'll take profit at the next level. But using it again, you might find yourself in a profitable trade, but not take the profit and end up losing money on it. So there's no need to raise the take profit. We take profit at the nearest strong level, but on the higher time frame. So if there was another level here on the 5-minute chart, and the price moved like this, wouldn't take profit at that level, because that's a level on the local time frame that I'm trading. But on the higher time frame, for example, you can't see it at all. It's like I just gave the example with that low, for instance, the 5-minute chart. Well, there will be some level here if I look at the 1-minute chart, but on the 5-minute chart, it doesn't matter. So this level wouldn't matter on the higher time frame either. On the higher time frame, the nearest one matters. I'll leave the take from it. It's all simple. Now I need to assess. Here I enter the trade. Here, I've already assessed it at 100 plus. For me, it's theoretically acceptable. The take profit, be at 10%. I see that it's 1 to 2. So theoretically, I'm making 10%. I'm losing 5%. Well, that's without leverage. With the second leverage, it would be plus 10, or rather plus 20, minus 10. The risk to reward ratio shouldn't be too high. Ideally, it shouldn't be below 1. So 2 is a good normal ratio. 3 is just great. If you have an average ratio of 5, yeah, you open a lot of trades, and on average it's 5, well, you're a professional. Well, of course, if you're in the profit over the average number of trades. So theoretically, ideally, the risk to reward ratio should be 1 billion to 1. So you earn $1 billion on a profitable trade and lose $1 on a losing trade, right? So how do you do that? Inflating the take profit is a mistake, I already told you. It's also a mistake to set the stop too low, like putting it right up close. You'll just never close a trade in profit. You need to set your takes and stops not just by thinking, okay, I'm down 5%, so I'll set the take at around plus 15, like here. That's a mistake. No, you need to set it where there are actually buyers and sellers. You're working in the market. You're not just randomly rolling dice in a casino. No, you're working in the market with real people, there are real prices, and there's real supply and demand. You need to be able to analyze and adapt, and then draw conclusions. Maybe the entry point is bad. So if I had entered not right here and I had a 2-to-1 ratio, but somewhere earlier, or if I didn't manage to enter here and I ended up with like 0.5 to 1, right? It means the mistake isn't that I, damn it, set my take here and I should have set it about 3 times higher up. The problem is that I just entered the trade incorrectly. The entry point is fine, but I entered here and that's wrong. In fact, even if you have a risk-reward ratio of 1 to 1, if 70% of your trades are profitable, you're a successful trader. No, the problem is that I just entered incorrectly. The entry point is fine, but I entered right here and that's wrong. In fact, even if you have a risk-reward ratio of 1 to 1, if 70% of your trades are profitable, you're a successful trader. You can even trade on a 1-to-1 ratio. The main thing is that many transactions are profitable. If you have a high risk-to-reward ratio, but your trades are only profitable with a 10% chance, then it's ineffective. The range should be from 1 to 3. A good realistic range closer to 3 is better. 5 is possible but top level. Anything above that is unlikely, don't chase it. That is, Ideally, there is a range from 1 to 3. Here is a good range on average, which is achievable, realistic, not overstated, not understated. Closer to 3 is better. 5 is theoretically possible. This is generally the highest level of skill, but higher is extremely unlikely, hardly, and there is no need to chase after it. And remember that even if you have 1 to 1, but in the long run, you are in the black. That is, you earn, in more than 50% of cases with a risk-to-profit ratio of 1 to 1. You're a good trader. You just need to open a lot of those kinds of trades, and you'll make money from trading. Subscribe to the channel. There's a lot of content about trading here, and even more through the links below in my other social media. By the way, I have a free mini course on trading in my Telegram. If you don't know how to trade, go through the lessons. They're in the pinned message. So subscribe to my Telegram channel and check out the pinned message for the mini course. Good luck.